Hello again, everybody. Doing here from DRFX Forex Swing Trading. Going to be taking a look at the situation on the Swiss franc Japanese yen, which now appears as if it's going to give us a trading opportunity to either head back inside of the consolidation setup on the daily chart or start a bearish breakout that will continue a significant downtrend in favor of the Japanese yen. Now, the last time we took a look at this pair a couple of weeks ago in September, I had noted that based on certain candlestick patterns that take place across the currency market, the expectation was for this pair to form a consolidation setup at this area here. And as you can see from this current situation on the daily chart, this is exactly the type of pattern that has now been formed. A pennant consolidation with bullish and bearish waves that eventually led to the formation of this setup. So right now, we're in a situation in which we could either see the market head back inside of the consolidation or continue to break bearish in favor of the Japanese yen. Now, the ability to predict the formation of that consolidation has to do with identifying and being aware of certain candlestick patterns across the currency market that tend to indicate when these patterns are going to be formed. There are approximately 10 patterns or 10 signals that lead or give us an indication that the market is going to be forming these patterns. And once you're aware of them and you incorporate them as part of your trading strategy, then you'll be able to successfully take advantage of them. So you'll be able to move from a situation in which you're using a trend trading strategy to one in which you're now trading within the boundaries of consolidation between resistance and support until the breakout takes place. So an awareness of these factors will definitely help you in being able to identify these patterns and to take advantage of them when they appear. So right now, we're in a situation in which the market could either continue to break bearish after U-turning and testing the support, or we could simply have a situation in which the market continues bullish here and reverses and takes us back inside of the consolidation, back to the resistance boundary. Now, this expected or possible movement back inside of the consolidation would essentially be what we call a false breakout reversal. And from the theory of false consolidation breakouts and reversals, these can take various forms. We could either have a double bottom setup and a signal that starts a reversal, a small consolidation setup followed by a signal, or an ABC setup with the formation of a bull candle at the C to head back to start the movement just above the support boundary to head back to resistance. So based on what I'm seeing here, a bullish candle here would be similar to the ABC setup. So once we get a strong signal that closes comfortably above the support boundary, then it's going to be a strong indication that we're going to be headed back to the resistance area. On the other hand, we could simply have a situation in which the market will U-turn and eventually provide us with a bearish candle that takes us and continues the movement in favor of the Japanese yen. So this would essentially be continuing the current downtrend in favor of this pair, and this could be started with a strong bearish signal that takes place at this area here. What would be happening essentially is the fact that whenever we have consolidation breakouts, the market can break out initially and then pull back to test the boundary before U-turning to provide us with a signal. So as long as that signal is strong enough and closes comfortably below this counter trend line, then there will be a strong indication that we will be headed bearish and that a strong trading opportunity will present itself. So those are the two opportunities that we could see for this pair over the next couple of days. A U-turn followed by a bearish signal, or a strong bull candle that closes above the support boundary to start a strong false breakout reversal that takes us back inside of the consolidation. So once we get a signal in either direction, the next step is to fill out the trade sheet. This is an important step when it comes to trading, and we need to ensure that the criteria that we set out to justify a trade is basically what is going to appear here. So the patterns and signals that we see on the daily chart and the 4-hour chart need to be in sync and conform to the criteria that we set out in this trade sheet. Once that is done, then the trade can be executed. The next step is to fill out the trade sheet form, fill out the relevant price information, entry, volume, stop loss, etc. And then the last step will involve determining the holding period for that trade. Now, depending on whether we get a movement back inside of the consolidation or breakout, the holding period is gonna vary. So what the reason for this is that movements back inside of consolidations or movements within consolidations generally have a different holding period compared to breakouts from consolidation. So that distinction is going to be a crucial difference when it comes to trading. So once that signal appears, then we will know how long to hold our trades for, and after that we simply close the trade and then wait for the trade to hit our target. So that is the situation on Swiss franc Japanese yen for now. We're gonna be waiting for the market to provide us with a signal in either direction, and then maximize on that signal for another strong gain. So until then, take care.